So in this video, we're discussing shorts and the short squeeze. Particular trade that I made last week was in CMC. I've been trading CMC for quite some time now, both on the long and on the short. And I saw CMC having a hard time breaking 23s. And so I subsequently went short here, ended up covering just below $22. And of course it comes back to that point of resistance again, as you can see right here, and then immediately sells off. So I, again, at the beginning of the day when the market opened, I purchased again some 23 puts in the stock. And subsequently, because I know there's earnings coming out, and if you look at the stock on the a little bit on the daily, this is a daily chart, you can see the stock's made a really big move from 14, a little less than a year. In about 6 months, we went from 14s to 22s. So in my mind, and looking at the chart, I'm thinking that the stock is just not going to break 23, even with good earnings. Earnings came out, and the earnings were very good. They had beat earnings, and I think their revenue was a little bit off than what it was expected. Now 23, this is on the 5-minute chart. You can see multiple times where it tried to come up to these 23s and then subsequently fell short. Same thing here, gapped down, came right back up. So the stock gaps up. The very next day, I'm short. I have about 15 contracts from 23. Subsequently, during the open, you can see what was the resistance of 23. It now became a support. You can see that right here on the 5-minute chart, right? Where the stock opens at 23.68, and immediately the market's reaction is to sell off. Right, it sold off to 23.4s, and then subsequently came right back up to $24. So now I'm out the money $1. So what was my previous resistance now is looking like an area of support. But yet, so I'm still holding, watching the position, but the position is not moving. Right, there's a lot of volume coming in. I'm holding this thing for several hours, right? Because it doesn't start to move until about 11:30. So in my mind, I'm thinking the stock isn't moving. I think everything is already, into the stock. And the fact that it slightly missed revenue as like the market and more likely going to sell off. So I ended up purchasing 24 puts. So I already have 23 puts. I end up purchasing 24s, and then I end up purchasing more. I end up purchasing another 15 puts when the stock is up here, right? So those are well out the money, right? They're $1 out the money. Now, of course, I did that, one, because I see the stock starting to move down, and then two, I'm watching to see how the stock is going to translate once we get to 23s. And you can see, which I've talked about this in my previous videos, about paying attention to areas of support and resistance. And like I said before, 23s were our previous area of resistance that became a support early morning at 9:30, the first 5 minutes of the trading day. The market utilized the 23s as an area of support. And so I'm watching. Subsequently we break through, come all the way down to as low as 22.67. And again, you always have to allow for a little bit of wiggle room. And then the very next 5-minute candle, you can see that the market comes right back to above 23s with a high of 23.16, and subsequently the market sells it down. And so you can easily see how this is a real prime opportunity to continue in your short. If you're wondering, should I have gotten out of 23s? What's the market going to look like? How do I know what's going to happen? The only way to know is by patiently waiting. And this, of course, as the trade goes on, the market just slowly winds all the way back down, right? And I end up covering right around here, around like 22.80s, because I was waiting to see how the market was going to react to 22s. I don't know, like you're thinking, well, you missed quite a bit from 40s to up here into 22s, and it's true. The reality is, as a swing trader, you're going to miss a lot of these movements on the 5-minute chart. The reason being is because we could have hit 22s, and then we could have subsequently continued to sell off to 21s, to 20s. You don't know. The only thing that you do know is where are your areas of support and where are your areas of resistance. And of course, you can see a little bit of resistance right here at 21.70s, and then subsequently the stock comes off of it, comes back to those 2770s, and then goes up, which is what caused me to end up covering my position and then subsequently taking a long position. I ended up buying the 20, I think it was 2021s when the stock was coming down here, and the reason being is because I felt it was overstock. It was oversold, and of course the market reaction. Of course you can see it. So I sold it off. I held it into the next day, and you can see the stock over a couple of days has come up. I have subsequently gone re-short. Because once we came back to that 23s, we sold off, and I was already anticipating a sell-off. So when the stock has been up here, I've been short for several days now. I'm still holding my CMC, and so you can see the stock did come down $1. I'm waiting to see how it's going to react to this level right here, right? Because it's 20 cents between 50s and 70s. It double bounced here, as you quadruple bounced here, and here, but it may teeter down another point. So I'm willing to, hold off. The 20 cents really doesn't mean that much to me if I can make the $1. And that's basically what swing trading would look like if you're utilizing things like put and call options. Excuse me. If you're utilizing things like put options and how I trade over the course of several days, sometimes even weeks or months, looking for bigger moves.